Well, welcome everyone. I am sorry we are late. My name is Lisa Collins. I am with Benefitbay. We actually had to pull and go to webinar to help us with some technical support. Barb and I are both organizers and neither one of us could get in. So looks like we got them to get us straight. So welcome everyone and thanks again for your patience. We are going to spend the next 30 minutes talking about challenging renewals, yes, probably on the horizon, and how ICHRA can come to the rescue. So with that, let's get started. A couple housekeeping items though. I'm sure you'll have questions. ICHRA is new to many of you. So pose your questions in the question area. We will get them answered throughout the webinar, and for those that we don't get answered, we will reach out to you afterwards individually and get those responses to you. So feel free to put the questions in the question area. We have many people on and we can't unmute you because of that. So, but we do want to get to those questions. So let's address just kind of what we're going to talk about today. Again, very high level as a starting conversation. We'll have many more webinars to address this new ICHRA frontier. We're going to talk about some industry trends that we are seeing and how ICHRAs can provide solutions to these trends, and then share a couple success stories and actual case studies, so some data to really support what we're saying. And then we'll end with how you can start going down the ICHRA path, talking to your clients about ICHRA solutions. We all know that the majority of employees are getting their health insurance through their employer. Actually, 156 million people have health coverage through their employers. Their employers are choosing a plan or two, maybe three, for them to choose from. So employers choosing plans to provide to the employees. But we're seeing that about half of them are not satisfied with their plan choices. We have a very diverse workforce today, and it's hard to have one or two plans really meet the needs of everyone. So that resulting from half of the employees not being satisfied with those plan choices that they have. And then we've seen these group increases pretty substantially since 2011. The premiums have more than doubled, 55% since 2011. And we also know that you hear this, I'm sure, at open enrollment time. Employers consider the cost of the premium the #1 reason to consider a change, whether that's a change of the plan design, increasing renewal deductibles, co-insurance, co-payments, or actually moving employees completely to a different carrier. So big concern over those costs. So we've got these employer concerns that you're dealing with. You've heard them for many years now. Coupled with some business trends that we're seeing really have expanded those employer concerns. We have a very diverse workforce and many of them are working remotely now. 92% of the workers are at least working part-time. That's very different than a couple years ago. And employers, they have a big task managing that. And part of that is the health insurance plan, networks and so forth, may not be meeting the needs of those employees that are working remotely. We also are seeing a lot less shorter tenure of employees. 1.8 years on average in 2021 was the employee tenure. That's less than 2 years somebody's staying on the job. We have workforce diversity. 51% of the employees are not well positioned to meet that diverse. If you think about it, many of your clients probably have 3 generations of workers, maybe even 4 generations of workers. So somebody that's just early on in their career will have a very different need for health insurance than somebody that's older, getting towards the end of their career. And we have all heard about that great resignation. 4.5 million in late 2021. Many people rethinking what they're doing with their careers, leaving their employer. We're seeing very short tenures. All of this was really compounded by the pandemic and made these trends permanent. 81%, I couldn't believe this number, 81% will stay remote. Big difference in how to manage the workforce. So let's take a look at just a Kaiser Family Foundation. You know, many of us in the industry, we really look to this for very valuable information. And the survey in 2021 shows that increase, the average annual worker and employer premium contributions for family coverage. So let's take a look at this. If you look at the bars, you can see where the employer, I don't know, the lighter pink or the lighter mauve, I guess it is, the employer contribution has gone up considerably. They're absorbing more of the increase than anybody else. Where the worker, yes, they have a slight uptick, but really the employer is absorbing those increases. So you can see from 2016 to 2021, just alone, that's a 22% in total premium increase, a big difference. And then for the worker, it's a 13% contribution increase. And ultimately, this means it's less take-home pay for the employee. There is a quote here from the senior VP president at Kaiser, and he says, companies realize that their plans aren't affordable, particularly in that lower paid worker environment. These plans are expensive and hard for their employees to use. So given the cost of the healthcare in the country, it's pretty difficult to fashion good benefits at a lower cost for employees, particularly, again, for the lower and the moderate age worker. So we've got all these business trends, we've got the employer concerns, we have the premium increases. That's really on the group side of things. Let's take a look on the individual side. Now, when ACA came around, we know that many of the carriers pulled out of the individual market, and we saw a big shift. We're starting to see a shift back. We are seeing a true stabilization in the individual market. On the left-hand side, we see the map of the US, and those states that have dark blue actually have 3 or more choices, number of insurers, 3 or more insurers available in that state. And you can see there's quite a bit of dark blue. So we have the major carriers and some new ones entering into that individual market, giving some really good choice to the employees. The number of consumers with multiple insurer options have steadily grown in recent years. The ones with the orange are the ones that have limited. So if you're in those states, the ICHRA solution that we're going to talk about may not be the best fit right now. But I would say pay very close attention to what's happening in your individual market. You will definitely see changes in the future. On the right-hand side, we have the BareCred map of the US showing the difference between the lowest cost bronze plan for the individual market as compared to the small group market. And you can see that anywhere that has kind of that very light gold to kind of almost a very light gray to a very deep gold, that's where your small group plans are more expensive. So you can see certain states absolutely as a whole have the individual plans are less expensive than the small group. So anything that's really a very light blue, is that gray, is that gold area, that would be a very favorable ICHRA market as it relates only to premium. We'll talk about some other things outside of premium that we're seeing a movement towards the ICHRA solution. So individual markets are stabilizing in the premiums, but also stabilizing as far as carrier options and plan options. So let's talk about this individual coverage HRA as a solution to all of the things that we just talked about, the trends, the employer concerns. ICHRAs are both for a small group and a large group. It allows really that shift from the defined contribution where the employer is making the plan choice to the employer just making simply a choice of what they're going to contribute towards that individual premium. The premiums, the contribution towards that premium from the employer is a pre-tax event. The employees will not pay taxes, and it's a business write-off for the company. So use of the pre-tax dollars to buy individual medical and ancillary insurance. For the small groups, we can actually leverage the subsidies by taking a look at what subsidies are available. You can make a contribution that is not affordable, so unaffordable. Now this is 50, under 50, not affordable. They don't have to worry about ACA. And if it's unaffordable, they can waive out of the ICHRA option that the employer is providing and access the subsidies. For the ICHRA for large group, it will or can meet the ACA mandate. As long as that ICHRA contribution is considered affordable, it does meet ACA mandate. So no penalties by getting rid of the group plan and putting in an affordable ICHRA option. ICHRAs can also work in conjunction with a group plan. So you can create a class, we'll talk about classes in a minute, you can create a class of employees and only offer that class ICHRA, an ICHRA plan, and another class, only a group health plan. What we're seeing more commonly though is a complete replacement of that group health plan. Managing the renewal, terminating the group health plan, and putting in place an ICHRA solution. ICHRA is enabling that migration from the group and individual insurance. Now, I've had brokers say to me, Lisa, this scares me. This is going to destroy my group business. It absolutely is not. It can work in conjunction. It can solve issues, renewal issues. We have employers tell us we just want out of the insurance business. This would get them out of that, but provide a solution. The employees still expect health insurance. So enabling that migration to the group or individual, don't think of it as hurting your group business. Actually, I have some brokers that very successfully we're working with use this as a prospecting tool, and they're getting new business that traditionally they have not gone into a particular industry because it's been challenging to get a group health plan instituted. And we'll talk more about that as well. So classing provides complete flexibility with these ICHRA solutions. We have the most common classes. There are 11 classes, but the most common classes that we're really seeing in play is salary, hourly, your seasonal employees, part-time, full-time, and a geographic location. Now, it could be a rating area, but more commonly what we're seeing is a state. So these classes can be used for determining who's eligible for an ICHRA plan, and the classes can also be used for the contribution by class. So you can vary your contribution based on the class of the employees. Let's look on the left side here, eligibility for ICHRA. You could say that only full-time employees are eligible for ICHRA. You could say that only a salaried population class of employees are eligible for ICHRA, or maybe just an hourly, or maybe just seasonal employees are eligible for ICHRA. You could say that a particular state, employees in a particular state are offered ICHRA, where maybe the corporate office is in a different state and they have the group health plan. Seasonal, agriculture, retail, that seasonal type worker, you could provide an ICHRA to provide insurance for them while they're working in that seasonal capacity. What we're seeing too is some very interesting results by using the classes to determine contributions. The contributions, this probably flies in the face of everything that we think about with the group side of things. You can have a different contribution for different classes. Really common is what we're seeing is the salaried employee contribution differs from the hourly employee. Maybe the salaried employees are the managers and they're giving more of a contribution to the managers. They're key employees for them. It's a retention tool. Where they're hourly employees, maybe they're giving less of a contribution. There's no problem with using classes to differ the contribution structure. State, so in the individual market, state premiums vary considerably. One state, we saw that on the VeriCred map, one state may be, quite a bit more expensive than another state. So by using the class of a state, you can vary the contribution. One state may need more of an employer contribution because the individual premiums are higher than another state. And really importantly, this really isn't a class, but you can age band. And age bands can be 5-year age bands, 10-year age bands. It provides equal buying power for the employees. So in the individual market, in almost all states, there's exceptions to this, the individual policies are based on the age of the employee, the age of the spouse, and so forth. Well, an older person is going to pay more, certainly, for the premium than a younger person. So if you give more of a contribution to the older person and less of a contribution to the younger person, that gives more equal buying power, right? It's not going to cost that older person so much more than a younger because you're making the contribution higher in the older age brackets. So who's considering ICHRA? So 2023, that kind of looks fun. I mean, we're right here. The renewal time is coming. It comes very quickly. Now is the time to talk about ICHRA in concept, right? Introduce the concept to them. So when you start looking at renewal options, you're further along in that conversation. They know what ICHRA is. Now you're getting into the details. 15% of the employers are considering an ICHRA. So just think of your book of business as a whole. 15% of your book of business is considered an ICHRA. I've heard from several brokers that they are finding out about ICHRAs not from their broker bringing it to their attention, but like a SHRM environment or their accountant is bringing it to their attention. So you want to be proactive and talk about ICHRA. 20% of the large employers are considering ICHRA. It is not just a small group play at all. Actually, our average size group is an applicable large employer on our platform. So larger employers are a very good fit in many situations for an ICHRA. And then 35% of CFOs are considering that. And that just goes back to the earlier slide where we're sharing that, the premium or the increase in the premium is a key factor in considering change for health insurance. Our most common plan designs that we're seeing, the first one is a salary hourly class mix. If you've got a population that has both salary and hourly, this really can meet the employer's objective. In my earlier example, I was talking about salary usually is a management, and hourly, maybe they don't get as much of a contribution. I'll use a restaurant as an example. You have your restaurant managers are salaried. Your hourly employees are, your wait staff, your cooks, your sous chefs, and so forth. So you can structure a contribution to be different in the salaried group, the management, from the hourly group. If it's a small group under 50, you actually can take a look at maybe making the hourly class unaffordable and accessing subsidies, but the salary class would be affordable and they would have the ICHRA contribution because most likely there aren't subsidies there because they're higher paid. We're seeing groups, employers using ICHRAs to meet their ACA mandates. So think about those industries that traditionally in the past, pre-ACA, didn't offer group health plan. I'm thinking like home health care as an example. And then all of a sudden, they're over 50 employees, ACA passes, they've got to come up with health insurance, providing health insurance, or they've got some pretty stiff penalties. Now, many were, using MEC plans or doing something that they would avoid the penalty A, but still incur the penalty B. By offering ICHRA through an affordable contribution structure, and affordability is the same thing, that 9.61%, so no change in definition there. Lowest cost silver plan, so as long as it's affordable, it can meet the ACA mandates and they can provide a really good benefit program, health insurance, based on the employee's needs, because the employee's choosing it, on the individual market and meeting their ACA mandates. We're also seeing ICHRA solve a very challenging situation most recently with geographic locations. So you can offer different contributions to employees in different states, and I already talked about that because states vary in the individual premiums. But maybe you've got a, Kaiser comes to mind. Kaiser is only in certain states. Maybe they had a group health plan that provided Kaiser, but now they've got employees in other states that don't offer Kaiser or some other regional player. You could keep the Kaiser plan, but in different states offer the ICHRA that don't have the Kaiser. So a lot of different variations here. You can also combine the classes. So using a state, I'm in Virginia. Virginia is a state, and then within the state, you could have Virginia salaried employees and Virginia hourly employees. But maybe, my counterparts are some of the employees are in Texas. You could use Texas salaried, Texas hourly. So a lot of variations there as well using the locations. And then think of those industries that are really challenged with hiring. I think about the restaurants recently. You see the signs on the door, please be patient. Their staffing has been hurt. They can't hire enough people. So I go back to that restaurant example again. Seasonal employees, part-timers, they're hiring a lot of part-timers. Maybe offer them, help towards their individual health premiums with an ICHRA contribution. So challenging hiring, but also challenging industries where in the past you weren't able to offer a group health plan, maybe because participation just is not where it needed to be to get a group plan in place. Okay, so one other, when I say the participation at renewal time, you may have a situation where the participation's low, they come in with a high renewal, and you have nowhere to go with that group. You can't change carriers because the participation numbers are not where they need to be. There's no solution. Today there is. An ICHRA solution has no minimum participation requirements. So let's look at a couple quick case studies here. This was a 20-employee hospitality group, happened to be in Georgia. They actually found savings of $4,500 because of government subsidies for their employees. So they made the ICHRA contribution unaffordable. The employees were able to waive the ICHRA because it was unaffordable. Only reason they could waive out is if it's unaffordable, and they took the government subsidy. It was more than what that unaffordable ICHRA contribution was. So they structured the plan so that the hourly class of employees that we just talked about purchased a subsidized plan, while their higher compensated employees that had no subsidy had an affordable ICHRA contribution, and they used their employer ICHRA dollars to help pay for that individual premium. Okay, so that's one small group case study. Let's take a look at a large group. So over 50 employees, an applicable large employer, 80 employee healthcare company. They got a big increase, and we heard this time and time again last year. The employee population varied by age quite a bit. They had many, generations within the workforce, and the employers were generous. I mean, they were offering a large contribution. They were contributing towards the dependent coverage. By using what our software to model a contribution, they were able to keep their costs at the same level as the previous year, while increasing the contribution amounts available to the family coverage. So this was a big success story, and I'm going to show you some numbers in the next slide that somebody was, a partner of ours was very gracious to share. So with this particular situation, we found $630,000 in savings below the renewal price of their group policy, while decreasing, and this is really key, decreasing the average cost employees pay for their family coverage. So let's take a couple look at some numbers here, and I'm going to skip over some of this because I lost a couple minutes on the front end, but we will share this presentation. So this group, their their plan, they're paying $4 million annually for their group health insurance. At renewal, it went up 38% to $5.5 million. Pretty significant. When we introduced the ICHRA and the contribution, the amount came down to $3 million. You'll notice that that's $2.5 million less than their renewal, but also $1 million less than their current group rate. So pretty significant. And the employees' out-of-pocket cost, 2021 was $3,000, I'll call it $3,600. It was going to increase to almost $4,900. But because they instituted this premium, they actually saved the employees over $4,500 a year. And at the same time, they increased their premium percentage that the employer was paying. So before ICHRA and the group, they were paying almost 76% towards the premium. They took that savings, that $1 million savings, and they bumped it up to 97% of the premium. So the employer passed the savings to the employee by increasing the contribution and ultimately saving the employees money, 6.5% of the average salary of this group. So increased participation, lowered the cost for the employee and the employer. But really what was very interesting is 100% of the employees, every single employee on the ICHRA plan, chose a plan that was either higher or lower than their current group health plan benefit. So that tells us that what the employer was offering was not meeting their needs because they didn't pick something similar. So how do you get started with this? We talked about a lot of different scenarios, a lot of moving parts with classes and age banding. Take a look at your book of business to start with, okay? Evaluate it now. We had several groups that wanted to go to ICHRA. But because there wasn't enough time to educate the employees, and that's very important, that's key, they decided to push the renewal, so they absorbed the group increase for a month or two, educated the employees, and then went into an ICHRA off renewal, like February or March. If you do manage the education with the employer, with your clients now, it will save a scenario like that from happening. They can move and not have to absorb that group health increase, okay? So analyze your book now. Now's the time to talk about it. Look at the groups that had really high renewals last year that you didn't introduce an ICHRA solution. Even a small increase this year compounded with last year's high renewal could be pretty significant. You may have a group that's on a level funded or self-insured type of a plan, and they're experiencing high claims. You're looking at that throughout the year, right? You know what's going to happen with the renewal because you've got your eye on their claims. Think about an ICHRA solution now. There's no medical underwriting with an ICHRA solution. Low participation. If you can't, if you got low participation, sometimes it causes a real problem at renewal because you can't move to a different carrier. So if you've got a group of low participation, introduce an ICHRA solution, or the concept at least, because it doesn't matter on the individual market. You don't have to have 50% of the employees participating in an ICHRA. It could be any number. Network carrier issues, we talked about that, more of a regional player or a Kaiser type of a situation where that network is not meeting the needs of employees that have now been hired in different states that maybe the employer did not have before. And then we're hearing this more and more. Employers simply want out of the insurance business. Every year dealing with the renewals, thinking about changing carriers, trying to figure out a plan design that will work for their population. They're just tired of it. They want out. So you look at your groups, what we call at risk, and then you're going to move to types of employers with the demographics that I just talked about. That hourly salary mix usually plays very well, leans into an ICHRA, fits an ICHRA solution. A lower paid workforce works well as too. Multiple locations, and those hard to insure populations. After you do that, you also want to look within your book of business and also to your marketing and your prospecting efforts at certain industries. These industries, this was a SHRM article that came out late 2020, but we absolutely saw that with our business as well, what the groups that adopted ICHRAs: restaurants, hospitality, retail, construction, landscaping, healthcare, manufacturing, delivery, professional services, nonprofit, and technology industries. So top 10 industries that we're seeing leaning into ICHRAs. How do you begin? As I said, it's never too early. You need to begin now. You want to introduce ICHRA to your employer. You want to review the individual market. Even though we have a solution to manage the individual market, we have many brokers say, I got out of the individual market. I don't want anything to do with it. I'm not getting back in. That's okay. You can still introduce an ICHRA solution. There's a way that we build in consulting fees for you to make you whole so you don't lose revenue. But even if you're not doing the individual enrollments, you want to understand your individual market. That's really key. What carriers, what kind of networks, what hospitals are in those networks. You have to have a very open communication with your employer, with your clients, what it means to move from a group plan to the individual market. Financially, it may make all the sense in the world, but you may find the employer is not willing to go into the individual market. So you'll know that upfront early if you talk about what that individual market looks like. A lot of times, you have HMOs only or narrow networks, but we find that that's actually better because you've got the major hospitals in there. You've got, your provider. Even though there's not as much choice, the choice is still very good. Review the premium savings with them by introducing an ICHRA, and our software will do that for you. It will compare the individual ICHRA contributions towards the group and show the premium savings. It shows current group plan, renewal group plan versus an ICHRA plan. Then you want to look at, what those affordability contributions look like for a large employer. Our software does that as well. And for a small group under 50, by employee, it will show you what the potential subsidies are. And we can together structure an ICHRA contribution that's unaffordable. I mean, these subsidies sometimes that I'm seeing are crazy. With the subsidy expansion, there's big dollars there. So let's not hurt an employee by introducing an ICHRA, like a group plan has hurt an employee, right? They can't get the subsidies. Let's help access those subsidies with the unaffordable plan. And then that would, they're waiving the ICHRA, so it's no employer cost, so it's saving the employer quite a bit of money as well. And then once they decide that they are going to go down the ICHRA path, yes, they're going to adopt it, it makes sense for their group, you want to start a very strong employee communication campaign. We have all the solutions, or not solutions, all the templates to help with that communication campaign. So you see at the bottom here, start now in March. I mean, open enrollment's November. We're really not that far out. Plant that seed, what an ICHRA is. 6 months prior to the renewal is June, really go into that individual market and have deeper conversations. And then our software, just to highlight a couple things that why, if you've decided to get into this, why to work with us. I would say our number one reason why to work with us is we only work through brokers. We're not going direct like some others. So we are completely partnering with you to drive this solution. It's not going to be a solution for everybody, but you do want to look at your book of business and check for the fit. Check to see if an ICHRA solution makes sense financially. Then you want to model it, come up with the contribution structure that makes sense using classes. Who's going to get more of a contribution than others? Making sure that the contributions are affordable for large groups, keeping it in the non-discrimination realm of that 3-to-1 ratio. Our software does all of that. And then if that everything looks good through the modeling, deploy it, same software, you deploy it, they shop and they enroll in the platform. I'm going to end with one huge differentiator, and that's our advanced reimbursement checking account. It is not a reimbursement process with Benefitbay, and this is really key. Many employees can't afford those individual premiums. They don't want the administrative work of submitting a claim every month and waiting for a reimbursement. Through the ARC, the Advanced Reimbursement Checking, at enrollment, the employee is provided with a checking account in their name. That is funded by the employer. So just like the group health plan, the employer is paying 100% of that individual premium. And then the difference between the plan that they selected, bronze, silver, gold, whatever it may be, and the ICHRA amount is the employee's responsibility. The employee's responsibility is taken out through a payroll deduction. So if it is purchased off exchange, the employer will still recognize a tax savings, payroll tax savings. So under Section 125 plan, those payroll deductions, they have the FICA savings, and the employee still maintains the state federal and FICA savings as well. So that ARC is a key differentiator and very, very important to make this feasible for the employees to participate. All right, with that, I am concluding. And again, thank you very much for your patience on the front end of our little technical snafu. But if you have any questions that were not addressed throughout, info@benefitbay.com, you can get in touch with us and visit our website. We've got some resources that we continue to expand and update that. So with that, have a great day, everyone, and we'll talk soon. We'll have additional webinars coming your way. Thank you.